All right. Welcome, everyone, to another episode of How I Met Your Mortgage. As always, I'm your host, Adam Smith, with Just the Tips Coaching. And we've got a really cool guest for you guys today. This is somebody that I've known for probably longer than I can remember. And it's pretty rare for me to have somebody on the show that is in essentially the same gig for a similar period of time in the same market. And it's really one of those situations where when somebody brings up her name and we're not together, the first thing that comes to mind is this is somebody that I would consider the worthy competitor. And I don't know that we would really say that, because when people are doing this kind of a role for this long a period of time at this level, we all know that there's more than enough business to go around, and it really isn't a competition. And in fact, we probably look upon each other more as an opportunity to elevate each other and see what the other is doing and spend time when possible learning and masterminding and so on and so forth. Unfortunately, that always seems to be traveling to other conferences. We've got to leave town to actually see each other unless we do something like this. So welcome to the show, Michelle Oddo. Hi, Michelle.
Well, hello, Adam. Thank you so much for having me. Excited to be here. And yeah, I'm excited to see you because
Yeah,
we don't get to see each other enough.
well, we've got to go to mortgage conferences to do
Right.
that.
Yeah,
So yeah, maybe Vegas in August.
that's right. There we go.
Maybe we'll do something to that effect and
Yeah.
run across each other at a
Yeah.
big event. But yeah, everything I said is absolutely true. And if like even in those weird instances where you see somebody in a Facebook group asking if they know a good mortgage originator, not that they would use that term because the general public doesn't know what that means. And somebody comments Michelle, I'm like, oh yeah, call Michelle. She's absolutely fantastic. There's no reason for you to talk to anybody else. She knows her shit. She knows her products. She's been doing this for a long time. Michelle started doing this when she was 8 years old. So it's probably been like, 21 years. And I'll let you tell us some of those details. But yeah, it's absolutely great. And I'm glad that we're finally able to do this. But yeah, give us a little bit of background. Where did you come from? How long have you been doing this? How'd you get into it?
Yeah.
Yeah,
All
let's
the
get into
things.
the Wayback Machine, Professor.
All the things. Okay. Well, I grew up in South Florida and my dad was a mortgage broker. So I grew up, I mean, he started off like insurance. He did a lot of insurance really most of my life. But when I was in high school, he became a mortgage broker. So when I got out of school, I went to work with my dad, knowing I would never ever do what he did. Like there was no way I was going to do what he did. It was a part-time gig. I was going to make some money. And I realized, I was going to school part time while I was working for dad, and I was doing some other things like bartending, all the things you do when you're in your 20s.
20s.
And but I realized I was really good at it, and actually I thought, I think I'm really good at this, like maybe better than my dad. So anyway, I decided
Uh-oh.
to go to work for another company after working for my dad for about, I don't know, maybe I was with him 4 years, just to see like how do other people do this, and does he really know? And but my dad was super smart, and I learned a lot through him. And then 30 some years later, I'm here in Colorado. Met my husband back in the 90s. I was an underwriter and a rep for the whole western part of the country. And Colorado was one of my territories, and that's how we met. So met long distance. I used to underwrite and approve his loans. And like I said, I was a rep for the western states. I had 11 states. And to your point, I've been doing this for like 30 years, a long, long time. I can't believe I'm old enough to say that, but that
Oh,
is
so you were
true.
9 when you
Yeah,
started doing this.
exactly. Yeah, that's it.
So your husband was a loan originator, or is?
Yeah, was and is. He, at the time, he was a broker working for a company when I first met him, and he was one of our clients. And then once I moved out here, he and I were brokers together for about 8 years, 9 years, something like that. And now all he does is reverse mortgages. So we do work together, but we don't ever work on the same deals. We don't have the same clients, the same realtors, any of that. We're completely separate in the same office.
Okay, but I've got to know, who was the lender you were working for?
At the time, and they're not around because this is way back, most of those guys aren't around anymore. They were called NLCI, National Lending Center. And it was back when, and this is kind of crazy, but you could be the rep and the underwriter. So I was literally like an AE for mortgage brokers, right? Like you, I would be your rep. And I also was your underwriter.
Wow.
So
Wow. Okay.
yeah.
That
But
I
this was all
don't ever
subprime.
recall that crossover.
Yeah. This was a lot, we were doing a lot of like subprime paper, which we call non-QM today.
Uh-huh.
So it was kind of a different world for sure.
It was a very different world, no question, but it's hard to describe what went on in that era in the early part of the century or I guess we would even describe as the early part of the millennium, to people that haven't been in the business that long, and what actually went on in subprime lending and what led to the Great Recession when it came to the greed in the mortgage-backed security system, and how Wall Street obviously has a very short memory, because I still see some remnants. The thing I can think of best is that I've got a colleague, and she and I both had a number of speaking engagements over the recent years at the non-QM forum in Dana Point. And we were sitting having lunch one day, and I don't know, it was in between me moderating a panel and her doing something on the women's network side. And we're sitting next to a table of people that are heavy in the non-QM space. And she isn't really familiar with the mortgage space, and she's too young to have really been through anything that went on with the Great Recession from an adult economic standpoint. And she and I walked away from lunch, and she said to me, "That sounded just like the script from The Big Short." And that was kind of eye-opening to me. That was when I was like, yeah, okay, we have kind of crossed over into another arena. And don't get me wrong, I think the non-QM business is fantastic. I think it is definitely see a need, fill a need kind of business. People that are self-employed and investors and foreign nationals and so on and so forth. We obviously made the lending guidelines and the ability to repay rules very, very strict following the Great Recession. So there was a need to be filled. And I guess time will tell where it actually takes us.
Yeah, I mean, I think non-QM, or what we called subprime, done correctly can be okay. Like, but there are some things that need to be. There's a lot of checks and balances, and there's some things that we should be looking at that I don't know that all the guidelines do even today. They're starting to get a little more loose, which I don't love that, and I didn't love it then. So there's a difference between, to your point, you're self-employed, your tax returns don't show your income, but you have good credit, your bank statements are strong, the deposits are there, the business is legitimate. That's different than no income, no asset.
I knew you were going to bring up the ninja.
Yeah,
Okay.
or even the DSCRs, like those make me a little nervous. Like there's some that I'm okay with, but some of those DSCR loans, which if you're listening, you don't know what that is. It's the debt service coverage ratio, meaning you're buying a rental property and all you're using to qualify is the rent. You're not using any income or anything like that. Granted, you need a fairly decent down payment, but is the value really the value? And is the rent really the rent? And what if
Right, that's
there's a pandemic and you
we're
can't
not really using the rent. We're using fair market rent.
Right. And what if there is a pandemic and you can't rent it? Or what if there's a hurricane and you're in Florida and you can't rent it? So there's a lot of things about that loan that I don't love, without the strength behind the client. So when I do those deals, I really want to understand the reason we need to go that direction, and do you have the strength behind you? Because like you said, you and I've been doing this a long time, and we know the end of the story if they're not done correctly.
That's very true. Now, we've been doing debt service ratio loans in the commercial space forever. That's pretty much how we calculate not only the lending capability on any particular property, but whether or not, in an acquisition sense, is it a good deal? Are we going to meet a debt service ratio that makes this a smart investment? And we've always had a bare minimum of what we want that debt service ratio to be. And in the residential space, I love that we do calculate that way. I love that we're looking at debt service ratios, or I guess in the residential space, we call it debt service coverage ratios. But that minimum threshold is significantly lower in the residential space than what we would ever consider, even bare minimum, in the commercial space.
Right.
So, yeah, I think that your concerns are valid. And I think that's part of what makes this, well, what makes a 3-decade career, literally a career in the
Right.
mortgage space, something that continues to be viable, that we're not in it to just close transactions. We're
Correct.
not in it to just make commissions. We're actually in it to make sure that we are helping people make good financial decisions. And there are a lot of opportunities where loans could get closed, but mistakes could be made.
Correct. Yeah, for
setting
sure.
people up for failure is, it shouldn't be on your list. Let's put it that way.
That's right. Yeah, it's not about the transaction. It's about the relationship and the long-term goal of the client and the repeat business and the, we always joke like, I'll probably be at your family reunion because once I do your loan, I'm going to do your sister and your mom and your, all the things because of the referrals.
That's
and you
the
only
way it
build
works.
that through doing the right thing, right? All the time.
It's funny because we talk about that multi-generational stuff quite a bit in my office nowadays, and I couldn't figure out the source, but one of these wholesale banks, and I can't remember which one, sent me an award for being like their top DPA lender that quarter or whatever it was. And I'm like, I don't really like doing DPA work. I don't, promote it or solicit it or anything like that. How did this actually happen? So we started backtracking. I'm like, oh, this is all of our clients' kids
Right.
that we're helping do all of this. And now our clients, I was like, oh yeah, that actually does make some
That
sense now
tracks.
that there are kids and grandkids that are buying loans where their parents or even grandparents had been involved. In fact, I'm working on one right now where it's been, they're the middle generation. They're selling and buying, and we've helped their parents and we've helped their kids. And yeah, it's really an interesting thing over that time frame. But let's talk about this from a position where not everybody in our audience has been doing this for 30 years.
Sure.
Okay. Did you ever go back to working with your dad after that 4-year stint?
No,
Okay.
I didn't. And I love my dad. He's not alive today, but he was, I'm half Russian. My dad was very, he was a hard ass. Can I say ass?
You can say ass.
He was a hard ass, but he was loving. Like he was such a great dad, but he was tough. Like you could not, I always joke, like you would never go to my dad and say, I couldn't, they told me no. Well, who told you no? Well, call their manager. Call that person. Well, did you ask him this? Well, did you tell him that? Like you would never go to my dad and say something couldn't happen. Like you had to work all the angles. Every problem has a solution. That was his philosophy. So he was a wonderful training ground. And really my whole life, he taught me to debate and to negotiate and to advocate for myself, all the things. But, and that was great. But I did learn a lot by going to another company. And then from there, I was a processor and a processing manager and an underwriting manager, account rep. I've done all the things. And so you just can't get that type of experience just working, for a family business usually. So I feel I'm really thankful that I've had wonderful people in my life that have mentored me over the years and have really poured into me. And I've just been able to learn, I feel like every aspect of this business, which is a blessing. Yeah. So didn't go back to work for dad, but I'm very thankful to everything that he taught me.
I do want to ask you about all of these different roles, but before I forget, in that original stint, where was the business coming from?
Where was the what?
The business. Where were you getting clients?
When I was with my dad.
Clients? Yeah.
Well, we were in South Florida. My dad had always sold insurance. My whole life growing up, he sold insurance. So he had a huge client base. and he knew a lot of people. He was really involved with like the teachers unions at that time. And he would take their teacher pensions and roll them into annuities and like, teach them how to manage their own money and make more money with it. So he had a big client base. He was always a connector, very big networker. And so I think that was just a natural progression for him to take those clients and help them with this other piece of their financial picture. And so that's where the business came from. And for me, we hired a processor. Her name was Gigi, who also just taught me so much, Gigi Gonzalez. And she, to this day, I'm friends with her. And so she and I were just, thick as thieves, and we worked together, and she trained me and taught me. And that was my training ground. Yeah.
What is she doing now?
She's still in mortgage, and she lives in South Florida still.
Good.
She's a loan officer down there.
So of all these roles, and don't get me wrong, I've never done any of it except originating. And there's kind of a funny joke, and you've probably heard it because of the circles we run in of all these people that have been doing this for a long time, that Adam doesn't know anything about mortgages except how to get them. Right? Which isn't exactly true, because there are a lot of occasions where I'll be having a detailed financial conversation with a client. I'm like, wow, I really do know this stuff. Okay.
Yeah.
And obviously just by default, but I've never been a processor. I've never been an underwriter. I've never been an account executive, despite being offered that job a number of times. But I've always kind of felt that, this is a tough gig when all your clients are lawyers and doctors and engineers. I don't think I'd want to be in a role where all my clients are mortgage originators, mortgage brokers. That seems just awful. But tell us a little bit about that. What was your favorite role? What was the role where you learned the most?
I mean, I think they're all uniquely amazing. Processing was wonderful because you really learn how to put a good file together. When I worked for the lender, I worked for a lot of broker. We were wholesale. So I would be the processor at the lender, helping you as a broker get your file put together. And to your point, a lot of brokers know way less than you, Adam, like way less. You probably know more than they'll forget, right? You'll forget more than they'll ever know, is what I mean to say. That's how they say it.
It's by default, but I get it.
Yes. But so I loved that because I could help them, take like something really messy and that was just, kind of a hot mess and be like, no, we don't need this. We don't need that. Help them just streamline it, put it together. And I think that really lends to my strengths of I'm really good at operations manager type stuff. So anyway, so I loved that. And then I loved underwriting because I understood how to put a file together. I know all the guidelines, and help people structure a loan. And I loved being a rep because you joke about, I don't think I would want my clients to be brokers, but I'd go in their offices and the files would be a mess and the papers are and I'm like, guys, let's fix this up. Let's make this look good. What are you doing? So all those things really help me be an amazing loan originator today. Like I understand how to put a file together. I know how to make it look great. I know the guidelines. I understand how to calculate crazy, complicated income with multiple, companies and tax returns, trusts, whatever. And I also understand what the underwriter's looking for because I did that role. And I understand what the client needs. So I feel like all those pieces just fit together. And I don't know that I had a favorite. I think they were all great. Yeah. Maybe being an AE. I think being an AE was really fun. I liked that. But I love what I do now the most.
It was a really cool gig in that era. I'm not gonna lie.
Yeah, I enjoyed it. Yeah. I got to travel all over the country and do trade shows and, take brokers to dinner and help them put their files together and answer questions and help them structure and, teach them all the things.
Okay. So here's the thing, because every piece of that you just described in all these different roles, it all leads back to Michelle being an educator.
Yeah, that's a good point.
Really, it does.
Yeah, it's a good
point. The things you've loved the most are you helping other people.
Yeah, that's a good point.
Teaching other people.
Yeah, because even today, one of my favorite things that I do in my role today is two things. classes for realtors, teaching realtors, helping realtors understand how to buy before sell programs, how to do all these things, right? I love that. I love helping coaching realtors. And I really love my team. I love coaching and training from an operations standpoint, my team. So behind the scenes, that's kind of one of the things I have to do every single day, right? And you joke that you don't know about loans, but I know that you know everything about loans. And
I know.
it's like people always say, "Oh, your team does everything." It's like, well, somebody has to drive the bus. Like, who do you think's teaching them what to do behind the scenes? So it's like, yeah, I do love that, and that's a good. Thanks for calling that out, because I think I overlooked that, but it is all education and helping people. Yeah.
Well, and I'm guessing that bleeds into what's going on with your clients now as well, because there is so much misinformation. Like, I can't even turn on CNBC and get an accurate mortgage rate. And they flash it on the screen all day long. Here's what the mortgage rate is today. And it's not.
Right.
I mean, that's just one example of so much in the way of misinformation. Even like what went on with the Fed meeting last week. First Fed meeting with our new Fed chair. Always an interesting time. And obviously there's a lot of misinformation, a lot of propaganda. I know you hear the radio ads and those kinds of things. At least we've gotten away from where John Elway and Peyton Manning were hawking for, mortgage companies on TV, local mortgage companies, that kind of thing. And I don't know, there's even one right now where you can always have the very lowest rate available. And it's called a streamline. Yeah, that's just how that works. That's available to anybody, everybody. You're not
Right.
special. In any case, there's so much misinformation out there. I mean, how many companies thrive on the propaganda that the Fed's going to raise rates, you better get your mortgage now? When the truth is, when the Fed raises rates, odds are good mortgage rates are going to come down. Now, we've obviously been preemptive. Private markets are usually a little smarter. I think it was Barry Habib who coined it best I've ever heard. The Fed drives the car using only the rearview mirror.
Right.
They don't look at what's actually going on. They don't look at what's going to go on. They can only look at what has gone on. So the Fed is kind of slow to make adjustments, in private markets like the mortgage-backed securities market are going to be a little more in the moment intelligent, that kind of thing. So it's funny to me because people say, oh, well, they said the Fed's going to lower rates. I'm like, yeah, and they might very well do that, which means the mortgage-backed securities market has been for the last couple of weeks.
Right.
And then we're going to rebound. And as soon as the Fed lowers rates, mortgage rates are going to go up.
Right.
So, that kind of thing. So, I mean, obviously, educating the consumer has got to be a big piece of Michelle doing her role, which is pretty much your entire role as an educator.
Right. Yeah. I mean, it's funny. It's so funny you say this, because I was just looking through, I just went back and answered a bunch of reviews. You know how you get these reviews and sometimes they pile up, and I'm like, I want to go back and answer all, thank everybody for these reviews. And I was reading through them to try to figure out what is the overarching message that people say when they're reviewing me. And the biggest compliment, the biggest thing that I read over and over and over again was advised, communicated, educated, answered our questions. So I do think that's really important to me. Sometimes you have a client that doesn't care. What's the payment? How much cash do I need?
Just get it done.
Yeah, like my hairdressers, my artists, they don't want to know. But my engineers, my attorneys, they want to understand, and I want them to understand, because I want
not the mortgage business, at least their mortgage.
Right, at least their mortgage. And why are we doing? Are you going to stay in the home? Is this a 5-year home? Should we do an ARM? Should we pay down points? Should we not pay points? All those things are important. So the education piece is really important to me. And I think you're right. People don't, the Fed's going to lower rates. Is my rate going down? Rates are down 50 basis points today. Is it 0.5% better? No, rates actually went up. The Fed lowered rates went up today. So, I'll pull up rate alert and I'll snip it and explain it and show them what's happened and why it's happened and all the things. But sometimes we don't even know. We don't always know what's going to happen, but we understand like the jobs report wasn't accurate, and then it got corrected. And even though
Yep.
inflation's coming down, jobs are
Payroll data
strong, or
was
vice
off.
versa.
Yep.
Yeah. So all those things, all those levers affect what's happening with the rates and with the economy. And I do think the media, as we know, loves to sell fear, and they want people to be fearful, and they love to sell the drama. And so we just have to constantly educate against that.
Yeah. I think it's really funny that you had mentioned about actually inquiring as to the long term, which to me seems like mortgage 101.
Right.
How long are you going to be in this house? How long are you going to keep this loan? I did a podcast recently for a financial planner in a role reversal where I was the guest. And I said something about that. And he said, I've probably done, 12, 15 mortgages over my lifetime. And nobody's ever asked me that.
That's crazy to me.
I was like, how has nobody ever asked you how long you're going to keep this house?
The most important thing. Like, right. And should we buy the rate down? And should you or shouldn't you? And how much is reasonable and how much is ridiculous? And are you getting seller credits? I mean, all these things matter. And that's where I think most of my reviews really hit on, yeah, Michelle really helped us understand how to make a good decision. And that's really important to me.
Yeah, I think that's if we shave it down to the bone, that's really what the role is, to provide really good data, really good education, and really good opinion so that they can use that data, that financial data, to make good decisions.
Yeah. And I like you said opinion, because a lot of times I'll say, well, if it were me, here's what I'm thinking. However, this isn't a bad idea either. Like, they're both okay. Sometimes it's equivalent, it's a 6 of one, half a day. But if it were me, this is what I would do. But this isn't bad either. And I know you really are feeling this way, but let's talk about that. But yeah, it's my opinion. And I've been doing this so long. Like, I think my opinion matters.
Yeah,
I think I know, but
and I think this is what I would do if I were in your situation.
Right.
Opinion is really valuable.
Yeah, for sure.
Especially after all this time.
Yeah, for sure.
Because not only have you seen pretty much every one of these situations, but you've been in a lot of them.
Yeah, I've owned property, bought properties, sold properties, refinanced properties.
Right.
I have rental properties. I've helped thousands and thousands of clients, right? All the things. So it's like, there's something, I love the book. I think it's called Outliers, and it's about the 10,000 hours. And there's something to be said for reps. I mean, when you've done something so many times over years and years and years, you can't replace that experience in education, right? And you and I have both done that. And so, I appreciate what you said on the intro, and I feel the same way about you. It's like, you can't explain that to somebody who's new. I told you my son's 22. He's just graduated college. He's just getting into mortgage, which he said he would never, ever do. So how that repeats itself is funny. But, it's like, he's so smart and he's learning so much. But I'm like, how do you give somebody 30 years worth of knowledge? You just can't. Like, he's just going to have to learn the hard way,
Yeah. And experience breeds that, no question. And I think as important as what goes on in educating people over and over, and a lot of it's re-education. We're telling the same clients the same things. I mean, obviously a little bit of the data has changed, those sorts of things, but of equal importance is remaining educated ourselves.
Mm-hmm.
That's a really big piece of the puzzle that a lot of people don't pay attention to. I mean, how many loan originators out there still don't know about non-QM work and how the ins and outs and nuts and bolts of that work? Yeah. Your husband's a really good example. How many loan originators don't know what a HECM is?
Right. Well, it's so funny you say that. I was at a closing this morning in Cherry Creek, and the agent, her good friend, is closing on a reverse, a HECM. And she said she's really stressed out. She thinks she's being charged. She doesn't understand the fees and this and that. So the broker, and maybe he's a great guy, who knows, but he did not explain thoroughly, or she didn't understand. Maybe he did and she didn't understand. But at the end of the day, if she doesn't understand, he didn't explain as well as he should have, right?
Yeah.
And so she was showing me all these closing figures, and I texted it to Tim, and Tim called the agent and was trying to help. So it's like there's just so much that needs to happen for the client to feel comfortable and understand it. But the education piece, like educating ourselves, Adam, like you said, a lot of it is just having the reps and doing enough business. It's a lot like realtors. I mean, they might have great intentions, but if they're not doing enough deals, then they don't understand the market. And if they think they do, but they're not doing enough deals, they don't understand the market. And so it's hard when, somebody just doesn't know, they don't know what they don't know. Right. And so it's really important, I think, as a client to make sure that you are working with somebody that has the experience, has the reps, is in the nitty gritty daily and really understands what's going on, because the market changes. A few years ago, two years ago, even 2-1 buy downs were huge, right? We were selling those. Oh, rates are definitely going to come down. I mean, that's what the economists, it's what we thought. Now, rates didn't do exactly what we thought, but if we're staying on top of it and we understand what's going on, we can help those clients pivot, and we can help our new clients decide if that's still a good decision, or is a permanent buy down better, or, all those things. So just being aware, educating ourselves, and really being involved in learning and understanding all the time what's happening so we can best help our clients.
Well, isn't that the bottom line?
Yeah.
It's really a single focus gig. Just take good care of your clients.
Yep.
The rest falls into place.
Yep.
Yeah, it's really fantastic that way. Gosh, so many of those. Now I'm having temp buy down nightmares.
Yeah.
Home builders. Right?
I know. Yeah.
Okay.
That's a whole nother subject, right? I mean,
yeah, we'll do another episode. And we'll call it, Michelle and Adam bitching about all the things we've seen that were just debacles over the last 30 years.
Right. Could have told you this.
Went on in the mortgage
Could have told you this was coming.
Yeah. Well, and actually, it's funny because I ran into some clients of mine at a school event for my youngest. Their daughter's a little older, but it was a school event of some sort, and they didn't know, but I had imparted the wisdom that mortgage is actually French for death contract.
Yeah.
Right. They're like, that's yeah, it would be. That would make perfect sense. I mean, even in just if you break it down to the basic Latin of how, Latin languages were formed. Yes. Mortgage means death contract.
Yes.
So, yeah, there's definitely a dark side to it. But, yeah, Michelle's been helping people get into insurmountable debt for decades now. So,
but I do love the concept of leveraging. And I think that what I love about real estate, it's the only investment you can make where, let's say you put 10% down, you buy a home for $700,000, you put $70,000 down, 10%, but you make your return on the $700,000, right? Where, you're making let's say you make 5% on 700,000 year one, that's 35,000 on your 70,000. You can't do that in the stock market. You're gonna buy what your return is going to be on what you purchase in dollars, not leveraging those dollars. So that's what's the magic and the beauty of real estate. So yes, it is debt, but I always say it's the only good debt is mortgage.
It is good debt.
And leveraging your money like that can really. It's why most millionaires are made a lot of their money in real estate.
Oh, and nobody ever got wealthy without owning real estate,
right?
And I think the reference I like best, and I use with a lot of clients who still, and there are places for people who want to pay off their house. I get it. It's rare. But, if I've got $1 million home and my next door neighbor has $1 million home and his is free and clear, then great. His house is earning him that 5% per year. Good for him. But I leverage the debt. And let's say I liquidate 80 or 800,000, my 80%, and I invested in a relatively casual manner, and I earn another 5% on my 800,000. That's not even taking into account the tax deduction that I'm taking on the interest. But by doing so, I'm essentially doubling my return because the equity has a 0 rate of return. The real estate market doesn't care what you owe on your house. It's going to go up in value the exact same way.
Regardless. That's right.
So, yeah, there are oh my gosh, there's so many of these education points. Now it sounds like we're starting to talk to the consumer. rather than to the people that would be in our normal audience here.
But you'd be surprised, Adam. Like I did a class for realtors. I don't know, it was about a year ago. And one of my good realtors was in there and she's been in real estate for a long time, like probably 20 some years. And I brought up that point and I really explained it and showed the graphs and everything. And she goes, you know what? She goes, I've been doing this 20 years. She goes, I guess I knew that at a high level, but I never thought of it like that. And I've never been able to explain it to a client like that. So just sometimes it's the most basic concepts that I think people forget. Like, this is why this is so powerful. Anyway.
They don't look at the real nuts and bolts of the wealthiest people.
Yeah.
Except for this time of year where we bitch about them not paying their share of income tax. But they don't have income. They have assets. They leverage those assets. So they have debt. The debt is tax deductible. And if we take that down to a bite-sized piece, an Adam and Michelle size piece, then yeah, same kind of thing. Use it as a proper financial vehicle. Yep. And make sure, and obviously it's directed to consumer here again, but make sure you're working with somebody who understands that what happens at time of transaction, what happens when you're closing on your mortgage is maybe as important as what it's going to look like for your dollars in a year and 3 and 5 and 10, because that's where the real play is if you're using your mortgage properly.
Right. It's a tool. It's right.
A tool. Yeah, it's a financial tool. All right, Michelle, we're going to get you on the books for another episode. I can't believe it took this long to do it in the first place.
Yeah.
I'll probably see you somewhere out of town before we get to do that.
In Vegas in a cab. I think that's the last time I saw, or in a...
Oh, that's right. We were going to the airport.
Yeah.
Yeah, you and Stephanie and I shared an Uber out to, they don't call it McCarran anymore, but whatever the Las Vegas airport is. Yeah, after that was a wonderful event. I still look back on that as it was so high level when it came to the content.
It was.
And it was so intimate when it came to the size of the audience. I would expect those people speaking at an event with 2,000 mortgage originators, not 200.
No, I agree. That was
it was absolutely phenomenal event, and thanks to Gino and who's his partner that puts that
it's the
on every
guys.
year.
Yeah. They're good. Yes.
Yeah, and they did actually just acquire the Mastermind.
I think so.
Company as well.
Yeah.
I can't believe I can't remember Gino's.
I can't think of his name either. I can picture his face. They do a lot of apartment buildings and things, which is kind of cool. They do a lot of investing in although they have their mortgage company, they also do a lot of apartment investing, and they're pretty smart guys. So
yeah, that was how I got involved. A coaching client of mine worked for their mortgage company.
Okay.
That's why I was there, and yeah, absolutely loved the event. They were incredible hosts. I can't say enough good things about that particular event. All right. Well, other than that, thank you so much. I know carving out this kind of time on a Monday morning is no small feat. So thank you for doing that. And Michelle, just for giggles, if somebody wants to reach out to you, what's the best way to get a hold of you?
Oh, gosh, they can find me a lot of ways. They can call or text 303-961-6906. They can hit me up on Instagram, automatic.michelle.
That's cool.
They can find me on Facebook by my name, Michelle Oddo, or just Google me, Michelle Oddo. I'll pop up. I have hundreds of videos and my website and all the things.
All the things.
So all the things.
You're not hiding?
I am not hiding. I am not a secret agent.
You're not that secret agent. I knew that was coming. My usual reaction to that is, are you dodging the IRS? What is going on here that I can't find you?
Yeah, no, I am everywhere. So just Google Michelle Oddo, look me up, hit me up on any of the socials, or really just a text or call is great. So yeah, we'd love to connect with anybody that wants to, has questions or wants to talk further. And I appreciate you so much, Adam, and just your expertise in the market, and you're definitely one of the good guys. So,
blushing. Oh, I would be if I wasn't so sunburned already. But yeah. All right. Well, thank you again, Michelle. And for the rest of you watching or listening live or in syndication, you can catch us live at 9:30 Pacific, 12:30 Eastern on Mondays on Facebook, LinkedIn, and YouTube. And on Wednesdays, you can catch the podcast on Amazon, Apple, and Spotify. And if you want to know other things about what we do, you want to see other episodes, you want to catch our weekly video blog, The Little Tip, if you want to get copies of the books I've written on this subject or find out about our annual conference, whatever, go check out justthetipscoaching.com. You'll find a bunch of information and certainly everything you need to reach out and get your questions answered. Other than that, Michelle, love you. Thank you. This has been fantastic. Don't run off. I'm going to run our extra. We'll chat for a few more minutes. And for the rest of you, again, listening or watching live or in syndication, we'll see you next week with another episode of How I Met Your Mortgage.